Bitcoin is a down payment, a Fed that's more worried about inflation than it was in March, and Albuquerque's biggest zoning rewrite in years, now actually on the books. Welcome to the National Pulse, the mid-month show where we zoom out to the National Jobs Report, the Federal Reserve, and the mortgage and financing, and zoom back in on what it means for us right here in Albuquerque. I'm Jonathan, and if you caught the first month Housing and Jobs Market Monitor, this is the companion episode to that. I'll leave a link down in the description. But this one's less focused on local price data and more on the big national forces that set the table for what we track locally. Let's get into it. Let's go back a month and let's start at the June jobs report, last month's numbers. Non-farm payrolls added 57,000 jobs. Wall Street, on the other hand, was expecting 150,000, and that's a big miss. Now, here's the number that gets misread almost every single month. Unemployment actually dipped to 4.2%. Sounds good, right? Except it dipped because the labor force participation rate fell to 61.5%, the lowest since March of 2021. People aren't finding jobs faster, fewer people are looking. Strength that actually indicates a shrinking labor force. And the revisions that came were really rough. April got cut by 31,000 jobs, and May by 43,000. Combined, that's 74,000 jobs that we thought existed a month ago, but actually didn't exist at all. Leisure and hospitality actually lost 61,000 jobs on weak seasonal hiring. Although healthcare is still adding jobs, but slower than its recent pace. I think the bottom line here is this labor market is cooling. Not falling off a cliff, but it's definitely cooling down a bit, and the details matter more than the headline this month. Let's jump into what the Federal Reserve has to say and how it affects interest rates. The Fed didn't cut or raise interest rates again in June. 3.50 to 3.75%, a unanimous vote. But the minutes they released on July 8th showed real disagreement under the surface. Some Fed officials think the right move by year's end is holding steady or going a touch lower, but others don't agree. But here's the part that should get anyone's attention. The Fed's own inflation outlook for this year just moved from 2.7% in March to 3.6%. And what was the reason they cited? AI infrastructure demand pushing up prices for tech products and electricity. Their next decision is July 29th. Markets expecting another hold, and on the mortgage side, Freddie Mac's latest survey has the 30-year fixed at 6.49% and the 15-year at 5.82%. Both ticked up slightly the past week. If you're shopping for a mortgage right now, mid sixes is your real planning number. Don't wait around for the Fed to bail you out this summer because it's probably not going to happen. And this is the story I've been personally really excited about. Alternative asset funding for mortgage down payments. That means using your stocks or your crypto that you have sitting in your brokerage account as down payments for your house. And we're actually starting to get some real progress and seeing steps for that to become a reality. Fannie Mae is now accepting its first live crypto-backed mortgage product built with Better Home and Financing and Coinbase. Now, that was a lot of words. Let me kind of explain what that actually means. You can pledge your crypto or your stocks, think Apple, Nvidia, Meta, Google, all of those. You can start pledging your own collateral for your down payment without selling it. So basically, you take a second loan against that collateral to fund your down payment. This traces back to the FHFA order from last summer, directing Fannie and Freddie to figure out how to treat verified crypto holdings as a real reserve asset. The important caveat here, there's still no industry-wide guideline here. This is one live product, not a new standard. The Senate Banking Committee is literally asking questions about the risks right now. And with the Clarity Act being discussed in the Senate and possibly getting passed in the next few weeks, I think this space is one that you really need to watch out for. So what does all this actually mean if you're buying, selling, or building in Albuquerque? I think it really means four things that you should look out for. The first one is it doesn't look like we're going to get any rate cuts anytime soon this summer, let alone this year. So plan for that 6% mortgage rate to still be really sticky until the end of the year, possibly going into Q1 or Q2 of next year. The second thing it means for Albuquerque, that AI-driven inflation story has local echoes here. We've already got grid capacity fights over new substations. Watch utility costs as a quite affordability factor alongside your mortgage rate. If you're planning to buy here, I would definitely look at the utility costs for owning a property in New Mexico alongside your mortgage rate. Because if electricity costs go up 25, $50, that's really going to affect the affordability and the type of house you can buy here. The third thing I think you should keep track of is the crypto-backed financing that could eventually matter for the small luxury and tech wealth. I think the third thing that we should watch out for that also kind of plays into last week's video where we talked about the reason home prices seem so high is because it's getting pulled up by the luxury market. If crypto-backed financing eventually becomes mainstream, that luxury and tech wealthy buyer segment in New Mexico could start to grow, which could inflate other house prices in New Mexico. So if you're buying, definitely look out and make sure the home that you're thinking of buying is priced appropriately for the area that you're looking in, and you're not paying a premium just because some house down the road that it's considered luxury is pulling up that home value. I think the fourth thing we need to look out for and keep an eye on is our local supply growth right now is coming from City Hall's own project pipeline and not from the broader rezoning. Before we really dive deep into the local policy issues in Albuquerque, I just want to take a second to say thank you for sticking it out this far. I really encourage you to click that like and subscribe button so we can help grow the channel so more people can get valuable knowledge about what's going on here in Albuquerque. Now let's jump into the policy and the development watch segment. So here's some big local updates in Albuquerque. The city's integrated development ordinance rewrite, that's O26-2, passed city council 6-3 back in February, and it's now live. And it's important because that's important because it's now touching an estimated 160,000 properties here in Albuquerque. It opens up duplexes, townhomes, small neighborhood bodegas, drops parking minimums on some corridors, and expands accessory unit access. But I think the bolder piece here is Mayor Keller's voluntary opt-in rezoning, letting individual homeowners upzone their own corner lot. But that one stuck. Zoning, the zoning committee voted it down 4-1 back in August of last year, and as of recording this, it hasn't come back. So where's the city new supply actually coming from? It's coming directly from city projects. The city just opened an RFP for the old Shriners property on Zuni Road, 40 to 100 affordable units. And Bernalillo County's Uptown Connect project, 239 apartments plus retail, replacing the Uptown bus transfer station that's moving, and that replacement is moving forward on a 46 million in county bonds. And before the next video gets released, I think these are a few of the things you should mark on your calendar and start to pay attention to. The Fed meets again on July 29th, and again at that meeting, they're going to decide whether or not to hire, keep rates the same, or lower them. In my personal opinion, I think they're going to keep them the same, just based on the jobs numbers we discussed earlier, at least until we get the next jobs report on August 7th. The GAR's next monthly report lands around August 10th, a few days before my next video will come out. The main takeaways I hope you get from this video is basically don't read into the unemployment rate and don't expect the Fed to free you from your high mortgage payment anytime soon. Like I said, probably Q1, Q2 of next year if we're lucky. Couple things for you to keep in mind is if you do own assets, I think being able to use alternative assets as a down payment, meaning you don't have to sell your asset, which means you don't have to pay the capital gains on that asset. Like if you were to go and sell $100 of your Apple stock to go help you with a down payment, you wouldn't have to do that if this new regulation starts to get passed and becomes a lot more mainstream. Well, thank you guys for watching again. I hope to see you in the next video. All the data and links I used today are in the description down below. Go check out the primary sources for yourself. If this was helpful, I just ask you again to please subscribe for both this mid-monthly market pulse show and the first of the month housing and jobs market monitor. I'll see you next time. Have a good one.